Hi, I'm Tom Lydon here in Hollywood, Florida at the Inside ETF conference. I'm here with Christian Magoon, who's the founder and CEO of Amplify ETFs. Great seeing you, Christian.
Good to be here. Thanks for having me, Tom.
So the cool thing about the ETF industry is there's so many ways to differentiate your strategies. And on the fixed income side, your ETF YYY is very different. Tell us about how it's different from the other ETFs out there.
Yeah, so there's a big search for yield. Many baby boomers retiring, I think 10,000 a day, and people are looking for high current income. So what we've done is created a strategy that looks at closed-end funds, which are kind of unique, not as well known as the mutual fund or the ETF, but closed-end funds have been actually around since before the mutual fund or the ETF in the United States. They have a unique feature, and oftentimes this feature is not liked by investors, but when you can actually buy a fund at a discount, that's actually a nice benefit, can increase yield potential, etc. So closed-end funds tend to trade at a discount to their net asset value. So we've created a strategy that goes out and buys closed-end funds at a discount to NAV, right now at about a 7% discount. And these funds are managed by BlackRock, Legg Mason, some of the biggest asset managers in the world, and you get a coupon to buy these closed-end funds. So an interesting way to go out and gather high current income, and something that we think differentiates YYY from many of the other ETFs in the market.
So not only are you getting the yield, but if you're buying smartly at that discount, and we get back to neutral level or even a premium, which they can go to as well.
That's right.
You have the ability for appreciation as well as the income, right?
That's right. So the current yield on the product is about 8.5%. When you look at the average closed-end fund discount, it's usually about 4.5% historically over the last 15 years. So we're buying funds that have a higher than average discount, currently around that 7% range, and hopefully that discount will compact, go to normal levels, so that could potentially produce a 3% return just from that discount compacting. And then you add that to the income and potentially the capital appreciation of the funds. It's a unique investment.
Yeah, and talk about the high yield marketplace. We've had this ongoing discussion about the triple Bs and might there be a threat down the road. How does your fund go in and search things out so if in fact something were to happen, you can act fairly quickly?
Yeah, so YYY is fairly diverse. It owns 30 different closed-end funds, and it's an index-based product, so it selects based off a methodology at the end of each fiscal year. Currently, the fund has about 30% of its holdings in floating rate funds. The next highest category is high yield funds at about 28%. So you have actively managed funds that you own within YYY. So these managers can adjust based off market conditions. So it's interesting because it's an index product of actively managed funds. So we trust that the managers, the BlackRocks, the Legg Masons will be able to adapt to those current environments.
And that's key because there's been a lot of money that's gone into pure indexes.
Yes.
That aren't in a situation that if people do start heading to the gates, that they're not going to be able to do anything, correct?
That's right. Yeah, there's maybe some would say a bubble in some of the index type strategies that are out there in the debt area. This gives you access to some of the best managers we believe in the world, some of the largest asset managers who we think can add value in that credit and in that income space.
Yeah, so having the active component, the discount,
that's right,
and ultimately that higher yield, it's kind of the best of all worlds.
That's right, and the fund pays monthly, so a lot of retirees are looking for that high current income on a monthly basis. An 8.5% SEC yield is very attractive in this current market environment.
Great, excellent. Great seeing you
Thanks
as
for having
always.
me.
Thanks.